Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be showcasing M1 Finance once again. So if you haven't checked out my video, of course, if you haven't checked out my channel, I do make stock market investment videos on M1 Finance, Robinhood, Merrill Edge. We talk about stocks, dividends, Roth IRAs, all sorts of fun stuff. And also we've been covering some real estate, so of course if you are brand new to my channel, consider subscribing for future videos and hit the notification button for future releases, because I do make videos every single week and you can get those notifications. So let's go ahead and get into the video. Of course, we're going to be covering M1 Finance. I'm going to be showcasing you the Roth IRA and the individual account, because my wife does use both of them on M1 Finance. Now, I made a whole video on why I decided to go with M1 Finance for my wife's portfolio. I'll have a link in the top right corner. You guys can take a look at all the benefits of M1 Finance, such as no fees, free trades, all sorts of other stuff. You know, I cover it all in that video. So what we're taking a look at now is the individual account, which is a taxable account. So right now you can see that I started this portfolio for her on February 8th, 2018. During that time, we were in a really rough time in the market, but right now we're actually down 1.41%, which is actually meaning that we've actually hit some rougher waters than last February. Last February, we tested out those bottoms. We lost 10% of the market during that downturn in February. It's happened again in March. So just this March, I believe March 6th was the Friday, we had lost roughly 2% of the index. Actually down 1.38%, but down 2.59% for the year. So we're actually down. We're testing the bottom, you know, the 200-day moving average right now on the S&P 500 and the NASDAQ. Overall, this portfolio has gone down, but due to referrals is actually positive. I started this account with $100 so I could showcase to all the subscribers and viewers out there that were interested in checking out M1 Finance. If you guys would like to start up on M1 Finance, I had a referral link. It's basically you give $10, you get $10, which is fine. You can start your portfolio over on M1 Finance with an individual account for $100. If you went through my referral link, you get an additional $10. So that's kind of what I showcase here. I started my account with $100, which anybody can do. Just $100 gets you in. Right now the market's down, so if you were to buy right now, you're at a great opportunity. You don't know if the market's going to go up or down. You just need to get invested and average down each week what you're willing to basically just deposit it. I'm not going to say, you know, it's not risky, because there is risk with every sort of investment, whether it's real estate, stock market, you know, if you invest in some hard money lending, there's always some way that you're going to possibly lose some of your money, but most of the time it's very beneficial. As you know, over the last several, almost like 100 years now, the average return on the S&P 500 has been around 7 to 10%. With inflation, it's minus 2 to 3%, so we're looking at an average of 7%. So if you start with $100, you're looking at a return of roughly $7 for the year. If you start with $1,000, that's $70. If you start with $10,000, that's $700. So it just depends where you want to start at. This is an individual account, meaning that you can start with $100 on M1 Finance. There's no fees. It's completely free. I made a whole video on why I chose, you know, to do that. I already did that earlier, and kind of how it's going. So just this last week, this portfolio with the S&P 500, it did go up by 0.92%. which is interesting. So I actually came out positive, whereas the index went down 1.38%. So I'm not sure what the differences are there, but it was positive, so that's 100% horky dorky, or, you know, some of the, you know, one of the things you can see over here on M1 Finance is the dividends. If you take a look at all, you can see here that I made 54 cents. So I started this on February 8th. That means in April of some time, or February, March, in March of some time, by holding the S&P 500, I made 54 cents. If I had $200 of the S&P 500, I make a little bit more than $1. If I had 300, I would make around $1.50. If I had 400, that'd be $2. So you can see here, by adding a little bit of money into the S&P 500, I was able to make some dividends. But Some of you may be saying that may not be too much, but what I have over on my Roth IRA account is a straight dividend portfolio. So on the Roth IRA, and we decided that we wanted to create her portfolio to be this is a Roth IRA, and we wanted this to be sort of like a cash paying account in a way. We wanted it kind of like an investment, sort of like real estate. So over here, this is mainly for capital gains, whereas this is only $100, but this is kind of showcasing what $100 can turn into with time. So that's kind of like a little experiment on the side. Over on our Roth IRA, this is a tax sheltered account, meaning that you don't have to worry about paying any taxes on your capital gains, on your dividends. And you may be saying that I'm down, 6.57%, but that's completely fine. I may be down slightly, but you never know when the market's going to be going up or down. All you can do is invest, and when it goes down, invest some more, invest some more, invest some more, and eventually you're going to come out on top, because every time that you invest a little bit more when you're down, you're averaging down your loss. So I might be down right now by 6.57. If I add $100 into that, that's going to defer my loss by around 0.10%, so a tenth of I'll go down slightly. If I need to, if the market does tumble down and I do need to just add more money in, I could easily add more money in, and that'll drop this down by half. Or I could double what my, this is all for 2017 right now. So I could deposit money for 2018, but right now I'm investing in real estate. I'm working on fixing and flipping some houses here locally. So I've been kind of doing that on the side, looking at some projects, and we're going to do a walkthrough on Monday of some ones that are getting rehabbed right now. So that's all up and coming. So anyways, kind of getting back to M1's finance. This portfolio actually has done really well. As you can see here, the 5-day change for the S&P 500 index is negative 1.38%. If we look at the 1-week difference for this portfolio actually came up positive. So there we are. This portfolio actually gained $51.04 for the week. $2.74 were from dividends, and the market gave me back $48.30. So even when the market went down, the main index, my Roth IRA is chugging out dividends, and it's also having some gains in the market. Now, right now, this has 15 stocks, a 0% expense ratio, meaning that I'm not paying anyone to manage this account for me. If you look at some of the broker fees that they charge you to track and do your portfolio for you, you're paying roughly a 1% fee. Plus, you may have expense ratios of 0.5%. So you're losing $1, 1.5% of your gains to fees, whether it's management or expense ratio or all sorts of other little fees you may be having. I have nothing in the account. All my money that I have invested is working for me. I'm not paying anybody to invest it for me. That's all on my end. So I'm getting a 4% dividend yield right now. Some people have said that this is really low, but this is a safe dividend yield. I'm not interested in some of those risky stocks that have a 10% yield, 15% yield. That just means that they may not be able to continue to pay out that dividend. I built this this portfolio with 15 stocks. 7 of them, which is around half, have been paying out dividends for more than 10 years. That means on these markets that are downturning markets, these 7 stocks, I believe, will continue to increase their dividends. They will pay me each week that they pay out normally. They'll be increasing their dividends by X amount even during downturns. And eventually with time, they'll recover. And then again, I have 8 stocks that are very strong growing stocks. I believe that in the future, these will turn into stocks that continuously pay out through downturn markets. And even if there is a downturn, they'll continue to pay out dividends. So some of these stocks include Apple, Cisco. Both of them have been paying out dividends for more than 5 years. I believe that Apple and Cisco can withstand a downturn in the market and continue to increase dividends, continue to pay out dividends, because they're both Apple. It's a very big service provider in technology. No one's going to stop buying their phones because they're able to afford them through a contract. They're able to just go out there and buy them. You need a phone. If somebody if somebody has a phone that breaks, you're going to go out there and buy your phone. You're going to go and do it. You're not going to live without your phone. And technology-wise, Cisco is an infrastructure. Everyone generally uses Cisco devices for their routers, their switches. Now they're getting into security. They're much better than any of their competitors, such as Netscape or Netgear, or I had the other brand on the tip of my tongue. But there's a couple other brands out there, but I don't recommend them, especially if you're doing any sort of company side. Anyways, let's see here. Some of the activity that we've had are dividends wise. We got paid out some dividends. We got paid out $5.30 in dividends. $3.25 of it was from Kimberly-Clark, and $2.05 was from Walmart. Now, could I have foretold I was going to get paid out $5.30? Well, if I go over here to my spreadsheet, here we have the weeks of the year, or the months right here. So 1, 4, 7, and 10. These are integers for the month. So January, April, July, and October. So right now we're in April. Week 1 just went by. So Walmart and Kimberly-Clark. If you go over here to our left, we have Walmart, which is right here, and Kimberly-Clark, which is right here. Now here are the monthly income. So $3.16 and $1.99. That's $5.15. I made $5.30. So I actually beat my expectations, meaning that because I'm averaging in each week, I'm buying more shares of these stocks. They actually paid me more than what I was expecting. I was only expecting $5.15. They paid me 15 cents more. So for the year, I'm looking at an annual income of $179.23. I'll probably end up getting closer to, $185, $190, or even a little bit higher. So next week, I'm looking at getting paid out by MO, and that is right here at the top. I'll get paid out $3.14. So that's looking pretty good, right? Every week I deposit $10, and that triggers these investments. So here, I only deposit every week $10, but you can see here I've been putting in $17.87, $17.39, $14.24, $13.59. Anything over $10 is those dividends being reinvested. As you know, it's kind of like DRIP, dividend reinvestment program, but it's doing it all for me. I don't have to touch M1's finance if I don't have to. If I don't want to, I just set this up. I could deposit my money in. I could set up. I could take how many weeks are remaining in the year of 2018. Okay, we have 40 weeks remaining in 2018. I could say I can deposit $5,000 more into my account. I could take 5,000 divided by the number of weeks. That'll give me roughly $90 I could deposit every single week. I could set up a schedule to deposit $90 every week. And at the end of 2018, I would have averaged in every single week my $90 plus my dividends from the prior week, and I would have capped my 2018 contributions at the end of the year and have been able to average down on these downturns each week. And also have increased my annual income. So that's pretty much it for this video. If you guys did enjoy the video, remember to check out my M1 Finance. I have a referral link in the description below. What this does is I basically give you guys $10 for using my referral link, and then I get $10. Now this is only for your individual account, meaning your $100 account. So if you start up an account on M1 Finance and you deposit $100 into your individual account to get yourself started investing, M1 Finance will give you and I both $10. So already you've made a 10% gain on your initial $100 investment without even being in the market very long. Now right now is a great time to begin investing because right now the market's going through sort of another little mini correction, but eventually, because these tariff talks it's a roller coaster right now. Somebody talks about tariffs, somebody talks about interest rate increases, and the market comes down. Then the next week, somebody says, we're making some great deals. We're working with China to come to an agreement on not giving each other tariffs, and the market trades up. So buy when it's low and ride it out when it's high, or sell off when it's high, or Just do nothing when it's at an elevated level, and then when it comes back down, average in. Or if you want to be very passive like this investment portfolio is, then all you need to do is set up your schedule to deposit $10 each week or $100 each week or whatever you want to do, and just stick to it. So that is it for this video. If you guys have enjoyed the video, remember to like, comment, and subscribe. I want to thank everyone for watching up to this point. If you did like the video, again, hit the subscribe button, hit the notification button. I make videos weekly. If you have any questions you'd like to add, go ahead and leave them in the comment section below. I always reply back to you guys. And of course, as a friendly disclaimer, I am not a financial advisor or tax professional. The information provided in my videos is my opinion for entertainment and fun. This is not investment advice. This is just me as a financial investor trying to help others make their money work for them and just kind of get you guys started in the market. You guys can take a look at my losses, my gains, and eventually you have to kind of get started if you want, take some risks. And I'm not worried about anything that's kind of gone on right now. Eventually it'll all recover. Plus, I'm getting paid dividends. So any loss that I may take for the short term, I don't actually lose any of that money. That's just equity. It's just similar to buying a house or a car. You lose a little bit of equity maybe when you drive it off the lot, but this is paying me dividends every week. So over the long term, anything that I may have lost short term will be, those dividends will outpace, and then I'll be positive. And then if the market corrects positively, I'm going to be coming out on top, over the long term. So that's it for this video. Thank you guys for tuning in. I will see you next time. Have a great day. Bye.